Today, we're diving into a comprehensive overview of limited liability companies, or LLCs. We'll explore their main advantages compared to other types of business entities, walk through the process of forming an LLC, and take a close look at how key features of LLCs stack up against those of other business structures. This will give you a solid understanding of what makes LLCs unique and why they might be the right choice for your business. An LLC, or limited liability company, is a type of business structure that offers a unique combination of benefits. Essentially, it protects the owner's personal assets from being used to cover the company's debts or liabilities, which is a key element of liability protection. At the same time, it allows for flexible management, meaning the owners can choose how the business is run without rigid corporate formalities. Additionally, an LLC offers versatile tax treatment options, so it can be taxed as a sole proprietorship, partnership, or corporation, depending on what's most advantageous. This blend of liability protection and operational flexibility makes the LLC a popular choice for many business owners. Let's look at the four main types of business entities. First, we have the sole proprietorship, which is the simplest to set up and owned by a single person. One key aspect here is that there's no legal separation between the owner and the business, so personal assets can be at risk if the business incurs debt or legal issues. Next is the partnership, where two or more people share ownership. This means profits, management, and also liability are shared among partners, which can increase personal exposure to business debts. Moving on to corporations, these are distinct legal entities separate from their owners. This separation provides strong liability protection, meaning personal assets are typically safe. However, corporations have a more formal structure and face stricter regulatory and compliance requirements. Finally, we have the limited liability company, or LLC, which combines the liability protection of a corporation with the tax benefits and operational flexibility more common to partnerships. This makes LLCs a popular choice since they allow business owners to protect their personal assets while enjoying simplified tax treatment in many cases. Understanding these differences is crucial when deciding which business structure best fits your goals and needs. One of the main benefits of forming an LLC is liability protection. Essentially, the LLC creates a legal barrier between the business risks and your personal wealth. This means that as an owner, you are generally not personally responsible for the company's debts, lawsuits, or other obligations. This separation shields your personal assets, like your home or savings, from any business liabilities. This protection is a core advantage of an LLC over other types of business entities, giving you peace of mind as you operate your company. When comparing an LLC to a sole proprietorship, the key trade-off is between formality and protection. Starting with liability, in a sole proprietorship, the owner is personally liable for all business debts and obligations, meaning personal assets are at risk. In contrast, an LLC generally protects your personal assets because it is a separate legal entity. In terms of taxation, sole proprietorships benefit from pass-through taxation directly to one owner. Simplifying tax filing, LLCs also have pass-through taxation by default, but offer more flexibility with tax options, which can be advantageous depending on your situation. Formation-wise, a sole proprietorship is the easiest and least expensive to start, since there are no formal state filings required. On the other hand, an LLC requires filing with the state, involves higher startup fees, and adheres to a stronger legal structure. Ownership in a sole proprietorship is limited to a single owner, while LLCs can have one or multiple owners, making the LLC model more versatile for business growth and partnership. Overall, choosing between these entities depends on your need for simplicity and low cost versus your desire for personal liability protection and a formal business structure. When comparing a general partnership to an LLC, there are several important factors to consider. First, liability. In a general partnership, owners have personal liability for the business debts, meaning their personal assets could be at risk. With an LLC, however, there is limited liability, which helps protect personal assets from business obligations. Next, taxation. Both entities typically benefit from pass-through taxation, so income is reported on the owner's personal tax returns. However, LLCs offer more tax flexibility, allowing members to choose among different tax classifications if desired. In terms of formation, starting a general partnership is very straightforward and requires little formal setup. On the other hand, forming an LLC involves filing with the state and adhering to more formal requirements, which can add complexity. Regarding separation, partnerships have less distinction between the owners and the business itself, whereas LLCs provide a clearer legal separation, which can help shield members from certain liabilities. Finally, management. Partnerships usually involve shared control among the partners, but offer fewer formal management options. LLCs are more flexible, allowing either member-managed or manager-managed structures, giving more control over how the business is run. Understanding these differences is crucial when deciding which entity is the best fit for your business needs. When comparing LLCs and corporations, both offer strong protection by shielding owners from personal liability, which is a key benefit. However, there are some important differences to consider. Corporations are known for their traditional structure, which provides very strong protection but comes with higher complexity and more formalities, such as strict administrative requirements. Additionally, corporations face double taxation, meaning the company profits are taxed, and then shareholders are taxed again on dividends. On the other hand, LLCs provide a hybrid advantage by combining strong protection with more flexible options. LLCs typically allow pass-through taxation, which means income is only taxed once on the owner's personal return, avoiding double taxation. They also tend to have lower complexity and fewer formalities, making administration simpler. Ownership flexibility is another significant difference. LLCs offer flexible membership arrangements, while corporations often have a rigid stock structure. Overall, LLCs usually provide more tax advantages and easier management, making them an attractive choice for many business owners. Now let's talk about tax flexibility, which is one of the biggest advantages of an LLC. Unlike other business structures, an LLC can be taxed in several different ways, giving you the ability to choose the option that best fits your needs. For single-owner LLCs, the default tax status is treated like a sole proprietorship, meaning income is passed through to your personal tax return. If the LLC has multiple members, it is by default taxed like a partnership, which also allows income to pass through to the owner's tax returns without being subject to corporate tax. Additionally, an LLC can elect to be taxed as an S corporation if that aligns better with your tax planning strategy. This flexibility to choose your tax classification allows you to optimize your tax situation, making the LLC structure very attractive compared to other entity types. The first step in forming an LLC is choosing a name and verifying its availability. This might seem straightforward, but it's crucial to get it right from the start. You'll want to pick a name that not only represents your business well, but also complies with your state's naming rules. Once you've got a name in mind, you'll need to check with the state to make sure it's not already taken. This naming search helps you avoid any legal issues down the line and ensures your business stands out uniquely in the market. Remember, a carefully chosen and available name sets a solid foundation for your LLC. Now, let's discuss the process of forming an LLC. The first crucial step is filing the Articles of Organization with your state. This is the official formation document that you need to submit. It usually includes important details like the name of your LLC, the registered agent who will receive legal documents on behalf of your business, the business address, and how your LLC will be managed. This state filing is considered the core formation document because it legally establishes your LLC. Understanding this step is key to setting up your business correctly from the start. Now that we're forming an LLC, the next crucial step is to create an operating agreement. This document serves as the blueprint for how your company will operate. It clearly defines ownership percentages, specifies the roles and responsibilities of each member, and sets out the voting rights to ensure decisions are made fairly. Additionally, it outlines how profits will be shared among members and establishes the rules for managing day-to-day operations. Having a well-drafted operating agreement helps prevent misunderstandings and keeps everyone on the same page as the business grows. Once you've taken the formal step of forming an LLC, the next crucial action is to obtain an EIN from the IRS. This employer identification number acts as your federal tax ID, which is absolutely essential for several key business functions. With your EIN, you'll be able to open business bank accounts, manage payroll, and handle tax filings properly. Essentially, this number transforms your setup into a structured and fully recognized business entity on a federal level. Now, let's talk about registering for state and local taxes. This step is crucial for your LLC to stay compliant with tax regulations. First, if your LLC sells goods or services that are subject to sales tax, you need to register for sales tax with the appropriate state or local authorities. Next, if you plan to hire employees, you'll have to set up payroll tax accounts, including withholding taxes and employer tax responsibilities. Additionally, it's important to check for any other tax obligations that might apply, such as franchise taxes, excise taxes, or specific local business taxes. Keep in mind that these requirements can vary significantly depending on your state, the industry you operate in, and whether your LLC has employees. Staying on top of these registrations helps ensure your business operates smoothly and avoids any penalties. An LLC usually doesn't pay federal income tax as a separate entity. Instead, the business income is allocated directly to the members, which means it's not taxed at the LLC level. This is what we call pass-through taxation. Each member, like Member A and Member B here, reports their share of the LLC's income on their individual tax returns. So, rather than the LLC being taxed itself, the income passes through to the owners, who then pay taxes on their personal returns. This structure avoids the double taxation we often see with corporations, where both the company and the shareholders are taxed separately. The key takeaway is that the LLC's income flows through seamlessly to the members, simplifying tax treatment and ensuring profits and losses are reflected on their personal tax returns. Here, the main idea is about personal asset protection within an LLC structure. Essentially, the LLC acts as a shield, keeping your personal assets separate from any business liabilities. This means that if the LLC faces debts or legal judgments, your personal property like your home, car, or savings typically remain safe and are not at risk to cover those business obligations. The key concept to remember is that the LLC legally separates your business responsibilities from your personal finances, offering an important layer of protection. This structure helps provide peace of mind for members by limiting personal liability, which is one of the biggest advantages of operating under an LLC. Here, we focus on the operating agreement, which is essential for any business partnership. This document transforms what might be just verbal understandings into clear written rules. This is crucial because it prevents future conflicts, confusion, or imbalance in control among partners. The operating agreement clearly defines the ownership structure, specifying who owns what percentage of the business. It also details voting rights, ensuring everyone knows how decisions are made and who has the authority to vote on important matters. Lastly, it outlines how profits will be distributed among the owners, making sure there are no surprises when it comes to financial rewards. Overall, this agreement provides a strong foundation for a well-organized and fair partnership. An LLC provides protection to its owners, but only as long as that boundary between personal and business matters is respected. One of the biggest risks is commingling personal and business funds. When accounts are mixed, it becomes difficult to maintain the legal separation, which can jeopardize liability protection. Another common mistake is ignoring formalities, such as failing to keep proper records, skip necessary filings, or neglecting to create agreements. These oversights can weaken the LLC's status and open the door for liability challenges. Essentially, the LLC's protection fails when discipline fails. Maintaining clear boundaries and following the proper procedures is crucial to keeping that liability shield intact. When deciding on the best business structure, an LLC often stands out because it fits a variety of needs. It's especially suitable for small businesses, offering a manageable and flexible setup without overwhelming complexity. One major benefit is that it allows for multiple owners, which can be great if you're partnering with others. Another key advantage is liability protection. This means your personal assets are generally safe if the business faces legal issues or debts. Finally, LLCs provide tax flexibility, allowing you to choose how you want to be taxed to best suit your financial situation. All these factors combined make an LLC the ideal choice when you need a balance of protection, ownership options, and tax benefits. When we look at the key takeaways for limited liability companies, the first point to highlight is liability protection. An LLC separates the business's risks from your personal assets, which is something sole proprietorships just can't offer. This means your personal finances are generally shielded if the business faces legal or financial trouble. Next, LLCs provide significant tax flexibility. They support pass-through taxation. So the business itself usually isn't taxed directly. Instead, income flows through to the owner's personal tax returns, avoiding double taxation. Plus, LLCs offer more tax options than many other types of business entities. Another advantage is the ease of formation. Starting an LLC involves a straightforward state filing process, which is much simpler and less bureaucratic than forming a corporation. This makes it easier and faster to get your business up and running. Finally, member flexibility is a big selling point. LLCs can have a single owner or multiple members, and the management structure can be tailored through operating agreements to fit the specific needs of the owners. This adaptability makes LLCs practical and convenient for all sizes of business endeavors. In summary, the LLC combines liability protection, adaptability, and practicality, making it a very appealing option for many entrepreneurs. As we wrap up, remember that forming your LLC is about choosing the right structure to protect your assets and give your business the flexibility it needs to grow. Take the time to review your state's specific requirements carefully. Reserve your business name to secure your brand, and prepare your articles of organization thoroughly. These steps are your next move toward establishing a strong, confident business foundation. With this approach, you'll be well on your way to building a successful LLC.